All right, Doc. Let's talk some technicals now. Let's ask you, what does Doc look into a chart? If it's an indicator or a pattern, or what is it that makes you convinced, comfortable? Well, there can be a trade. This looks good for a quick buy or a short. So, what are those one or two or three things that you can share with us?
See, it will change over the years. Okay, when you set out to be a technical analyst, when you learn this afresh, then you are charged up with all the things that you've learned, and everything looks like it works. Of course, they do. It's not that they don't. But then what happens is, over a period of time, you got to create your brand of technical analysis, and this will then get married to or shaped by the way you like to do things in the market. Now you keep changing also. Sometimes you are an aggressive trader, then you are a long pull investor, you shift to medium term investing, and you keep wearing different hats at various times. So therefore your technical analysis and the tools that you look at also have to vary. So there's no one size fits all. So when you want to trade, then very obviously you have to look at something which will help you spot the setup so much faster. When you want to invest, you're looking at largely the patterns, right? And patterns develop over time, so you're looking at daily, weekly, monthly charts. When you're trading, you're looking at daily and lesser time frame charts. So the choice of the chart becomes the first thing. Next up, if you're looking to trade, the shorter the time frame that you're trading, the more you're dealing with momentum. So therefore, the more of a trader you are, or whenever I am trading, I will be looking at momentum indicators. Now there are, as everybody knows, hundreds of them, but over time you come to have your personal preferences. Well, I think the whole world over, 100 out of 100 technical analysts, you can say, will be using the RSI, right? I'm no exception. I love the way the RSI is, and I'm happy to use it also. But what is more important is that you take a look at the different types of oscillators that you like and recognize the chief strength of that oscillator. Right? Because an oscillator is designed to show various things. You want to put only one thing to use. Now, unless you know the strength of that oscillator, when I want to use this aspect, I must know that I have to go to oscillator number 1. When I want to use some other aspect, I must know that I have to go to oscillator number 2. So when you are trading, you need to look at momentum, and therefore a momentum indicator is a must. But trading is, what are you trading? You're not trading the momentum indicator. You're not trading price. So therefore price action is something that you must be very, very clear about. And the best indicator of price action is in candlestick charts. So I would say that a candlestick chart and a momentum indicator are two things that are mandatory for those who are looking at the trading aspect. Which momentum indicator, that you have to pick and choose depending upon how you like to do things. If you move to investing or slightly longer duration plays, let's say positional plays, etc., then you are looking at momentum only partially. So therefore, your focus cannot be on what the momentum indicator is indicating. The momentum indicator therefore only becomes a confirmatory item.
Correct. Yes.
Your focus therefore is on price action. And so therefore, you must know very well the ways to define price action. Right? Or you may use moving averages, you may use Bollinger Bands, you may use pitchforks, you may use different channels, you can use Heiken-Ashi candles or whatever you like. But you must be thorough with that. Over the years, I have concentrated a great deal on improving my reading of price action. To the point that if you see my setup on the machine, you'll find that it is largely only a plain chart. There isn't anything on it other than a plain candlestick chart. You won't have any averages, you won't have anything else. That's because that price action tells you what's happening, and once you are able to read price action well enough, you can even come to a complete idea of what the oscillator will be saying. You don't have to look at an RSI to know that whether it will be at 30, 40, 50, 60 or whatever. The price action itself will tell you that the oscillator must be this way, or the moving averages will be faced thus. So it's really going towards price action that one is. So if you ask me today what do I use, it's only price action. When I want to specifically see something, then I would surely add one momentum indicator, or if I am in doubt, I would add some price action definite. Over the recent years, something called the Ichimoku trading system has actually come to become more well known, and I do believe that that's a very, very good way of looking at price action. The translation of Ichimoku is charts at one glance. Right? That's what Ichimoku Kinko Haya means. And it verily does that. Right? So if you're trading or if you're investing, you should be able to know at one glance on the chart, where are you in the scheme of things? Are you well in time? Have you missed the bus? Did you just miss it? Or it's long since gone? What is the risk if you were to take a trade now? Potential for the trade will always be there. But these things, I think the Ichimoku does a decent job. It creates a bit of a messy chart.
Yes.
So you need to know that style of charting a little better. Essentially, it's just a bunch of moving averages, right? But it's a slightly superior way of dealing with moving averages. So I would think that I use a decent amount of Ichimoku also.
That's good. So that's what experience brings in. When we all start, it's like price, and then we are fascinated with a long list of indicators. So we put 2, 3, 4, 5, and then we come to a point that we realize, wait a minute, everything is derived either from price or volume. So these are all first derivative, and slowly with experience what we do is we chuck them out one after the other, and then it's like a full circle. We come back to where we, and it's just pure price.